If you've clicked on this video, there's a good chance the market hasn't been feeling great lately. And if I'm honest, you might not be feeling great either. Everywhere you look right now, there are headlines shouting things like Bitcoin hits multi-month lows, over $2.5 billion liquidated in 24 hours, extreme fear grips crypto markets, and retail capitulation underway. And when you're already invested, or even watching from the sidelines, seeing those headlines stacked on top of each other can be enough to make anyone feel uneasy. So before we go any further, if you're new here, welcome. My name's Paula, and on this channel we talk about crypto and markets in a very real, grounded way. We don't promise overnight riches, we don't pretend this space isn't risky, and we don't ignore the emotional side of investing. Because in my experience, that's the part that actually decides whether people last long term. This video isn't here to tell you what to buy or sell. It's not a prediction, and it's definitely not financial advice. It's a conversation, the kind I'd have with a friend who's feeling overwhelmed by the noise and just wants a bit of balance, perspective, and reassurance that feeling like this doesn't mean you've failed. When markets turn red and headlines start using words like bloodbath and wipeout, it can feel like everything is suddenly out of control. You start questioning your decisions, wondering if you should sell everything, whether you should buy the dip, or whether you should just walk away entirely. That reaction doesn't mean you're weak or emotional, it means you're human. Markets don't just test your capital, they test your nervous system. And crypto does that more aggressively than almost any other asset class. One of the biggest issues with headlines is that they compress time. A single day of price action gets framed as if it defines the entire future, when in reality, markets move in cycles, and every single cycle contains moments that feel awful while you're living through them. A headline saying Bitcoin drops to X level doesn't tell you where we are in the broader context, but your brain reacts to it as if it's a permanent state. That's why it's so important to separate short-term price from long-term context. Short-term price action is driven by fear, greed, leverage, liquidations, and forced selling. Long-term outcomes are driven by time, adoption, liquidity, and positioning. When markets fall hard, it's often not because something has suddenly become worthless, but because too many people were positioned in the same way, and the market needed to flush that excess out. This is why we talk about tools like the Fear and Greed Index. But it's really important to understand what it is and what it isn't. It's not a magical indicator, and it's not a signal that tells you exactly when to buy or sell. It's a sentiment gauge. It measures emotion. When the Fear and Greed Index is flashing extreme fear, what that's actually telling you is that panic is widespread, confidence is low, and many people have already sold. Historically, those conditions tend to show up closer to important lows than tops, which is why you hear people say things like, buy the fear or buy the dip. This is the part I really want to slow down and be responsible about, because this idea gets thrown around far too casually. Buying the dip is a good idea in principle, but only if you can genuinely afford it. Not rent money, not bill money, not money you'll need in the next few months. Crypto is the riskiest major asset class there is. That doesn't make it bad, but it does mean it needs to be treated with respect. Prices can go lower than you expect, stay lower for longer than you expect, and move against you even when the long-term story still makes sense. Buying during fear increases probability, not certainty. If you buy the dip and the price goes lower, you need to be able to live with that emotionally and financially. If buying a dip means you'll panic if it goes another 20 or 30% lower, then it's probably not the right move for you, and that is okay. There's nothing wrong with waiting. There's nothing wrong with doing nothing. And there's absolutely nothing wrong with deciding that now isn't your moment. This is why risk management matters so much more than timing. Never risking more than you can afford to lose applies emotionally as much as it does financially. If a position is large enough that every red candle makes your stomach drop, that's usually a sign that your exposure is too high, not that the market is broken. Position size matters far more than being right. You can be right on direction and still lose money if your size is wrong. Smaller positions give you clarity, they give you patience, they give you the ability to think instead of react. Leverage fits into this as well, because while it can amplify gains, it amplifies stress even faster. And in fearful markets, it removes patience and forces decision. Diversification is another really important part of this conversation. And not just diversification within crypto. Holding 5 different coins is not the same as being diversified. Crypto should usually be part of a wider financial picture, not the entire thing. Cash, traditional investments, and assets that don't all move together give you stability, and that stability makes it much easier to hold your nerve when crypto is volatile. If everything you own rises and falls at the same time, every scary headline feels overwhelming. Holding some cash or spreading exposure across time isn't missing out. It's giving yourself breathing room, and breathing room is what allows you to make good decisions instead of emotional ones. Now, if your strategy is holding long term, there's another risk that becomes especially important during times like this, and that's counterparty risk. Exchanges are great for buying and trading, but they are not designed to be long-term vaults. History has shown us again and again that hacks and freezes and insolvencies happen often when markets are under the most stress. If you don't control your private keys, you don't fully control your crypto. And if your plan is to hold throughout a market cycle and wait for it to play out, leaving long-term holdings on exchanges is an unnecessary risk. That's why self-custody matters so much. Cold storage removes that layer of risk and puts you back in control. Personally, I use Tangent because it's simple, secure, and designed for people who want proper self-custody without needing to be overly technical. I'll leave my Tangent link in the description if you want to look into it. But the bigger point here isn't the brand, it's the principle. Long-term conviction needs long-term security. Another thing fear does incredibly well is isolate people. When markets are flying, everyone is confident and loud. When markets turn red, people go quiet. Doubt creeps in, and it can start to feel like you're the only one struggling. That's why community matters so much in this space. There are loads of crypto communities out there, but what really matters is finding one that's grounded, educational, and honest about risk. That's exactly why we built the Crypto Wolfpack. It's for normal crypto holders and traders who want to learn, share ideas, and navigate markets together without pretending this is easy or guaranteed. Inside the Wolfpack, we do daily live streams, we share trade signals, but more importantly, we focus on education, understanding market structure, risk, and psychology, including our completely free Liftoff course, which is designed to help people build a solid foundation instead of chasing hype. Community doesn't remove risk, but it does remove isolation, and that alone can change how you experience the market. One of the hardest lessons in crypto is learning that you don't always need to act. You don't need to sell just because a headline scared you, and you don't need to buy just because someone online says this is a once-in-a-lifetime opportunity. Sometimes the most disciplined decision is to pause, reduce noise, and let the market show you what it's doing. Fear is where risk transfers in markets, but that doesn't mean everyone should rush in. It means decisions made during fear should be slower, smaller, and more intentional. The goal isn't to eliminate fear, it's to stop fear from controlling your decisions. If there's one thing I want you to take away from this video, it's that feeling anxious right now doesn't mean you're doing crypto wrong. It means you're learning how markets really work. Investing isn't about being fearless, it's about being prepared, and preparation looks like managing risk, diversifying sensibly, taking self-custody seriously, and surrounding yourself with people who are learning rather than panicking. If this video resonated with you, I'd genuinely love to hear from you in the comments. Let me know where you're at right now, whether you're holding, waiting, learning, or just trying to stay calm, because chances are someone else reading your comment feels exactly the same way. If you want to go deeper, all the links are in the description, including the Tangent wallet for self-custody and the Crypto Wolfpack. If you appreciate honest, grounded conversations about crypto, not just the hype days, but the hard ones too, make sure you're subscribed. This channel is about staying in the game long enough to actually benefit from it. So take care of yourself, protect your capital, protect your mindset, and remember the goal isn't to win every move, it's to survive the scary ones. Thank you so much for watching, and I'll see you in the next one.